What's going on, everybody? Welcome back to my YouTube channel. I hope you all had a great weekend and you're ready to smash it this week. Today's lesson is just going to be on identifying pullbacks. Now, a lot of you have been asking me, can you tell me how I can identify when the pullback has ended so that I can get into these continuation trades? Because the whole concept, or not the whole concept, the whole theory behind trading with the trend is to trade when the market starts to continue in the direction of the trend, meaning if the market's going down, you want to take sales, and if the market's going up, you want to take buys. Now, I'm just going to tell you, there's not a concrete way to identify when the trend has exhausted, and excuse me, you can pinpoint exactly when the continuations are going to happen. There are concepts that you can use, and I'm going to teach you one of them today. Reason being because I think it's the easiest to learn, and also at the same time it can be applied to any time frame, which is a bonus for you and definitely a bonus for anybody using any strategy that they're using that falls in line with a trend continuation. Now, there are indicators you can use out there, but I personally don't rely on indicators simply because they lag. I personally like to just use price action and identify market structure alongside behavior. When you combine the two and then use patterns to enter your trades, you have a winning combination that can really accelerate your results and also at the same time avoid taking trades that you shouldn't be taking. So that will be the whole point in today's lesson. I hope you enjoy it. Make sure you smash that like button, subscribe if you haven't, and turn on notifications. Let's roll the intro and get onto the screens. Okay, so we're just going to understand this concept very quickly here, okay? When you're trading, the biggest advantage that you're going to have as a trader, the biggest advantage you're going to have as a trader is to trade with the direction of the market. Now, the reason why we want to trade with the direction of the market when it's trending down or when the market is trending up is because the market trends all of the time. Now, I know there's statistics out there that say the market only trends X amount of time and X, Y, and Z, you must be patient and wait. I agree with it from a high time frame perspective, but as a trader that's been trading or trend trading for a very long time, the market trends every single day. If you don't believe me, go on the 4H time frame, go on the 1H time frame, go on the 30-minute time frame. Do you know what? Let me go on the 30-minute and 15-minute time frame and all of that. Look, 4H time frame. Trend to the upside. 1H time frame. Let's get away from that trend to the upside. Look at this. Trend to the downside. Let's go to the 30-minute time frame. Trend to the downside. Let's get away from that trend to the downside and let's look for trend to the upside. Let's go to the 15-minute time frame. So we've done trend down, we've done trend up. Let's continue to look for, I think it's down up we're looking for. Trend to the downside. Trend to the upside. 5-minute time frame. Let's take a look at this. And this is just one pair, you know. This is pound USD we're just looking at here. And that's the only pair I trade personally. I do trade others, but more often than not, just that. Still trying to get rid of this chest infection. So 5-minute time frame. We've had to scale back a little bit, but oh well. Here we go. Trend to the downside. Trend to the upside. Trend to the upside. Now, I hope you get my point here. The market trends every day, and like I said, there's statistics that say that it doesn't, and it only trends, you know, now and again. I'm just telling you, trust the process. The market trends every day. Now, with that in mind, understand this: if you're a trend trader, no matter what time frame you're trading, the market will trend eventually. So the whole point, or what you should be doing as a trader, and this is why we talk about patience and discipline so much, is just wait for the market to trend. Now, the concept about trading with trends, or a simple concept, is you only want to take trades when the market has pulled back. The reason why you want to do that is because you want to avoid taking trades when the market is in a push phase. And the reason for that is because if you take a sell when the market is in a push phase, let's say you take a sell here, or you decide to take a sell here. Now, the odds of the market continuing down whilst it's in a push phase is still pretty high, but you run into a problem or a potential problem. When you sell that market, you never know if at this point it's going to pull back, or at this point if it's going to pull back, or at the point that it pulled back it was going to pull back. Do you understand? Once you can eliminate that potential thing happening or event happening, then you eliminate a negative expectancy when taking that trade. Meaning that if you identify a pullback, you're only following what the market is doing, and then you can take a trade with what the market usually does next, which is continues. Now, I don't know if I explained that very well to you guys and ladies, but I'm sure you understand just a little bit of where I'm coming from here. That's all that matters, right? So you want to eliminate the negative expectancy that when you take a sell in a push phase market, the market will exhaust. Oh, excuse me. So that's why we wait for the pullback. Now, when waiting for the pullback, we don't know when this exhaustion is going to happen. All we do know is that after it pulls back, if it's going to continue in the intended direction it tends to go, which is down or up, then there's a high chance that it will continue. But now the point of today's lesson is to show you how you can identify when the pullback has been created, and then identify structure that resembles that pullback, and then also identify behavior that resembles that potential continuation. So I thought we'd take a look at pound USD. Now there's so many examples on here, but the one I wanted to show you is this one here. Now, when looking at this, you can clearly see that the structure of the market was pushing to the upside, right? We get that. Now, we have something in Forex that I call a brick wall, you might call a trend line, but I'm identifying this area in the market as an area. If price stays above, there's a high chance we can take buys, and if price breaks it, then there's a high chance we enter the reversal. So looking at this area in the market, you can clearly see that the reversal is in play, or forget about that word reversal. It's a nonsense word, that the trend is now trending to the downside. Okay, so we have this trend trending to the downside. We can see price putting in lower highs, lower lows, lower highs, lower highs, whatever. Now the market has previously taken out previous structural lows, so these are the major lows in the market where price is finally broken below. And once we have evidence of this, what we're looking for the market to do is just simply pull back and look for a potential trading opportunity. Now, when we look at this market structure, I want you to see something here that's really important. This is how we would see the market in real life. The market would be pushing, would see wick rejections to identify a potential pullback area. Now, if you're a reversal trader, then you've got one more thing to worry about. If you're a patient trader that follows a trend, then you just know that there's a high chance the pullback is happening. You just sit back and wait patiently for this pullback to happen. And then what you do is you look for the signs of a continuation. So let's say now we're looking at this. Let's remove this. I do actually want that on the screen actually, so we can keep up with what's happening with the markets from our analysis on Sunday. But let's say we identify this pullback. Now at this stage, there is no sign, none whatsoever, to indicate that the lower high is forming. A lower high will form with price pushing, pulling back, and then eventually continuing down. We want to identify this point here. Now, how do I identify this point? Well, all you need to see, and this is a secret right here, and I'm giving it to you for free. The only thing you need to see is one wick rejection. One wick rejection. Once you get that sign of that wick rejection, price has resembled or illustrated or created structure that resembles a push phase and an exhaustion or a potential exhaustion. This is where you start to whittle this down. Once you get that wick rejection, I meant to say this is where the magic starts, but you get what I mean, right? The wick rejection. You drop in a level. Doesn't matter. It could be this box. It could be a rectangle. It could be a star. It could be a moon. It doesn't matter. Drop it in. What you then do is you scale down to one time frame below that. And what you will start to see on the lower time frames is a clearer breakdown of what the higher time frames are doing. As you can clearly see, this is now our brick wall to the downside. On the higher time frames, we have a pullback. On the lower time frames, we have a very clear trend with that pullback, but we now start to get more evidence of what? Wick rejections. Now, the more wick rejections you get in an area, the higher the chance that price is going to exhaust at that level and then continue down. But this is the point. Well, this is the secret. You are not taking a trade just yet. We now have structure that resembles a push phase and an exhaustion. You now have here on the hourly time frame structure that resembles an area or behavior where wick rejections are forming to continue to validate what could be the lower high. And then what you need to do is you need to find an area in the market where price is failing to break below. Now, when you scale down to your entry time frame, what you're going to see, so that's just one time frame below, that during this pullback on the higher time frame, price is doing what? It's ranging. Now, as trend traders, we don't take a trade in a range. We wait for the market to do what? Break the structure or retest the structure and continue. Now, because we're not sure still if the 4H time frame has created a lower high yet, we're only gathering evidence, price could explode to the upside and price could explode to the downside. So we need another confluence. So far we're working with two confluences. The confluence being a downtrend, a pullback, and a wick rejection. Just one wick. You may not believe me, but I'm telling you, okay? One wick. Then you go for your second confluence based on behavior, which is multiple wick rejections. And then what you're going to do is you're going to wait patiently for that lower high to confirm that it's a lower high. And what do you think we'd be looking for to confirm that that lower high is now a confirmed lower high? Because we're not going to sell now just in case price smashes to the upside still. But based on behavior, we can see price is creating multiple wick rejections and not making a new higher high based on the 1 hour time frame. So the momentum is still in our favor and structure is still still in our favor. But we don't have enough evidence to sell it yet because what is price doing? It's consolidating. So my question to you was this: what are you waiting for in order to take a trade? Think about this. What are you waiting for to take a trade? Logical thinking. You are waiting for momentum. If momentum kicks in your favor, then that will confirm the lower high has developed in line with the trend, which is down, and the behavior is validated, and then you only enter a trade based on momentum. What should you see the market do? Well, eventually you will see the market either break to the upside and then you start your analysis again, or eventually it will do this. Break to the downside and identify a continuation of that higher time frame structure, which is bearish. Now, just so that some of you know, if you're looking at this and like, well, it's broken the trend line or the brick wall that you keep mentioning on the hourly time frame, ignore it. What we're focusing on right now is the lower high that we drew in from one wick rejection, identifying how price is failing to break above, identifying the trend is down, and now getting signs of the momentum shift. Now you have confirmation that that lower high is probably the lower high, the exhaustion is over, and the momentum to the downside along with the trend is going to continue. What do you do at this stage? At this stage, you simply scale down to an entry time frame. And all you want to see is confluence of the trend on the 4H down, the momentum and behavior on the 1H down, and on your entry time frame, you are looking for what? You are simply looking for patterns. And those patterns can be represented by wick rejections, retest, double tops, lower highs, whatever the weather. You are just looking for confirmation. Remember that consolidation, look at the break, look at the retest, and then what can you do? You can look for your entries based on patterns and then take your trade. And I always go for 1 to 3 risk reward ratio. And this is how you would take a trade based on identifying when the lower high or the exhaustion phase has ended and the continuation of that momentum from the higher time frames kicks in. Simple lesson, simple concepts and principles. It's not a strategy. They're concepts and principles that you can now go and back test and identify and work out for yourself if this is something you can add as part of your strategy. So I hope you found that useful, everyone. You know, what I'm teaching you now is of my own opinion, so it could mean nothing to a lot of you, but for the person that this is useful for, I hope you find success in it. Always be patient and always remember that not every trade you take will win, but if you're patient, you are disciplined and you trust the process, get those 100 trades in, eventually the numbers will play out in your favor. I wish you successful trading, everyone. Again, smash that like button, subscribe if you haven't, turn on notifications, and until next time, trust the process.